With this, it's time to have an important conversation with Mr. Tarun Chaturvedi, CFO of Twamev Constructions and Infra. Mr. Tarun, welcome to ET Now. My first question will be there on the Q4 numbers. What actually led to this growth and what is the margin outlook ahead?
See, there are two significant factors which have contributed to the earnings in this quarter as well as the whole year. The first is that there has been a significant jump in project execution capabilities. There's been a takeover of this company by the new management, and the new management has overall the manner in which projects are being executed. This has resulted in speeding up of the project execution as well as efficient cost management. So this has resulted in a better top line as well as a better bottom line. That is why these numbers which are being reflected show a robust growth. The other significant contribution which has been made during this quarter as well as this whole year is the fact that there was an arbitration award given in favor of the company some long years back, and the company was contesting this at various levels of the judiciary. This quarter, it has achieved finality, and the same has been accounted for based on the accounting standards. So these are the two significant facts which have given rise to the increased numbers. The margins have been during this quarter, and they'll continue to be like that. And that's mainly because the project the cost management and the execution mechanism has been overall. Our margins range in the region of 8 to 10%, and they would continue to be so.
Okay, Mr. Chaturvedi, that's as far as the numbers for the quarter gone by are concerned, but the company has also witnessed a change in ownership and management. How will this impact the company going forward?
See, the new promoters have taken this company over from the NCLT under the IBC provisions. This company has successfully completed the CIRP and is one of the few EPC companies where a successful takeover has happened by the new management. The new management is significantly strong, both financially as well as in terms of industry experience. And coupled with both of them, the company will have strong working capital ability as well as project execution capability. So the bidding capacity will go up when joint bids along with the promoter companies would be made, and the execution would also go up because the promoters have significant experience in this line of industry.
That's right, but one question which investors will be asking, are there any legal liabilities which may adversely affect the company in the coming years?
This company has got no legacy legal issues at all. Today, in fact, this would be one of the few EPC companies where there is no contingent liability at all. Whatever legal cases the company is fighting, they are mainly resulting from claims which the company has made on various parties. So there is no legal liability which may adversely affect the working of the company in the future.
So legal liabilities will not affect the company in the near future. That's the word coming in. But Mr. Chaturvedi also wanted your thoughts on the current order book position and what's the guidance going forward when it comes to order book?
The current order book is in the region of around the unexecuted order book as on 1st April 2025 is around 330 crores. And this has to be executed over the next 12 to 18 months. So this will obviously translate into robust numbers over the next 12 to 18 months and would be a significant jump over what we've achieved over the last few years. And the margin would continue to be in the region of 8 to 10% EBITDA levels. There's no significant outflow on the interest part. And the company has a huge tax shield. So the EBITDA would translate into practically a PAT.
All right, keeping margins and order book in mind, overall, what is the outlook ahead for next 2 to 3 years? How are the tendering opportunities looking from the government currently?
This industry is seeing significant opportunities of growth. We are very strong in railway bridges, small and major bridges. We are strong in roads. We've also entered the lucrative segment of ropeways where we bagged a very important project in the state of Meghalaya, which is the Shillong ropeway. So in the next 2 to 3 years, the company would continue to focus on these sectors. The tendering pipeline would be strong. We already have a strong unexecuted order book. The tender pipeline is strong. The industry is going good. So it seems that for the next 2 to 3 years, the company would be significantly in a comfortable zone.
So that's the outlook. But Mr. Chaturvedi, any capex or fundraising plans that the company has for this financial year, FY26?
As far as the capex is concerned, this is a project-specific company. So depending upon what kind of projects we get and in which geographical sectors, the capex may be. But by and large, the new management is focusing on being a less asset-intensive company. So we do not plan to invest significantly in capex. As far as the capital raising issues are concerned, yes, a QIP is on the anvil. Shareholder approvals have been taken for the same. And now going forward in FY26, depending upon what is the fresh orders that come in, what is the fund requirement, etc., the company would like to make use of the shareholder approvals, which it has already got.
All right, thank you so much, Mr. Chaturvedi, for joining at this hour and giving a guidance on the Q4 numbers per se and details about the legal cases and the order book. Thank you so much once again.
If you like this video, then like, share and subscribe to ET Now.